Everything you see here is strictly informational. Forex is a high-risk business. Please do not place trades with more money than what you don't have. Please do not trade other people's money. Do not borrow any money than what you cannot trade with. And please take everything that I say as a personal opinion. I am not considered a financial advisor. I'm not considered a broker. I am just one here simply recording my journey along learning the markets.
What's up, everybody? It has been quite some time, if I do say so myself. Anyways, it's Ted here with Bodies and Wicks. I wanted to do kind of a special episode, but an episode that focuses on correlations, I guess you could say. Correlations that you should pay attention to, and to see what the heck is going on between these pairs, that's for sure. Between EURUSD, GBPUSD, the dollar, and we'll take a look at the dollar CAD as well. It's been a while since I have made a video, primarily because I have been studying my butt off and trying to, because before I just come off here and I just kind of give my thoughts about what's going to happen, and then we'll see what's going to happen. Now I've actually been trying to, there was a while there where I was actually doing pretty good, and I was actually making some good calls, and then there was a couple days there where I was just find like the one thing that I was like, was like new to me, and I was like, oh, this has got to work all the time, and turns out it doesn't work half the time. I mean, it'll work, but there's more to it than just finding that one thing that you find that's new and hoping it's going to work. No, it's a conglomeration of things. You got to take, you can't just take a little piece of the pie and then think it tastes good when the whole pie hasn't been baked yet. So if you catch my drift of what I'm saying. So anyways, what I would like to do is what I usually do is I just told you what I usually do is I just go over the charts and whatnot. If you ever seen me before, that's what I do. I like to do some analysis, especially on the Forex market. Sometimes, I'll do some on like SPX and NASDAQ, things like that. If you happen to like my videos, go ahead and hit the like button. That means more than anything that it shows when people are scrolling through videos, and they'll see people that like it. It gives them more of an inclination to click the video and check it out. So if you can like the video, if you actually really like the video and you want to see more, go ahead and hit that subscribe button. That would be really cool of you, because then you'll get notifications and whatnot whenever I come out with new videos. Hopefully I'll be coming out with more and more lately. There are more and more coming up, rather than I have been kind of sitting on my butt and waiting back lately. But let's go ahead and jump into the charts here, shall we? Alright, so first, what I want to do is I want to bring up here what we have is the dollar index. So we've been kind of at like a standstill here. The last couple months has been kind of odd for, especially since the end of June. I know or end of July. I know it's when we're kind of like in that sliding effect, and then all of a sudden we have been in like an accumulation phase ever since July, right? And it seems like we keep bouncing up, and it seemed like at one point we were getting ready to come out of it, right? Let me get rid of this. I don't believe in that crap anymore. It seems like we're getting ready to come out of this phase that it looks like the dollar was about ready to come up, and then all of a sudden it was boom, fake out, which actually is interesting because I want to check out something right now, since I've been studying this same formation pattern over and over again, and it seems to be working a lot, and sure enough, it looks like it's happening here. So this formation pattern to where it looks like it's going to give you, a false breakout. That false breakout pulls down, pulls back up to an optimal trade entry, and then boom, goes south. So It looks like that is what's happened to the dollar. What that means from the dollar this point on, that's what I'm afraid of. I don't think we've seen the bottom of the dollar yet. I think we're going to start seeing slowly but surely. Everybody's like, oh yeah, we're at a really, really weak point of the dollar. Not necessarily. I don't know if you've ever seen the history of the dollar or not, but let's just say, let's go back. Let's just say I put that trade in, right where it was. If we wanted to put that 3 times, the symmetry of what the dollar is, we would have to go back to the 2014 to find that symmetry of when that dollar happened. There are 3 times the symmetry of when that dollar amount happened. So to think we're at the low point of the dollar, we're definitely not. We're at a low point of what we've seen in a long time, but to say we're at a low point in the dollar, I think is absolutely false. I think we might see some more action happen within the dollar. We may see a little bit more of a rise and fall, but I think ultimately this is just a good indication of it to probably start slipping a little bit lower, especially with that trade that I just saw, the false breakout, and then it usually breaks down the other way. That is what usually happens, especially when I've been doing some backtracking, some back research and whatnot. That's what I've been finding. So what does that say for everything else? Let's check out GBPUSD. So if the dollar slides, what does that mean for the British pound versus the dollar? Well, it means it goes up. And as far as smart money theory is concerned, there are some equal highs right here. It's going to want to take out those equal highs. Is it going to do it just yet? Probably not, because what the British pound just did is it did the same thing. It did this thing to where it broke down, it came up. It was almost like it was going to be a false breakout, broke down, came back up, optimal trade entry, it starts to trade south. So I think we're at this, even though it's coming back up here, I'm not for sure if we'll see that continue on. I think we may see a fall back a little bit below, because it's been liking to do this lately, to where it likes to go back and down in between this little range here. And we haven't played in this part of the range in a while, so I think that's probably what we might be able to see, is somewhere in between these orange lines just here. That's why I haven't marked out. I have a feeling we're probably going to end up somewhere down in this range down here somewhere before we finally see another good pull up and on, because if you study smart money, there's this thing called the market maker sell model, market maker buy model, to where it does not, it'll spend certain times, in certain areas of the market before it moves on. And then, as you can see here, it's like you can put boxes around it, right? And you can probably Google it and find it, in different areas of the Google. There's a box there you can see, and then here's a box here you can see, and then all of a sudden, it jumps up, and then there's a box here that it kind of can go, it does it in, and then there's a box here that it does it in, so it kind of just plays around. It's never the same, support resistance type thing. There's always going to be like these little boxes that, different times and spaces that it likes to play in. So that's one thing you have to be aware of whenever you are taking, trading into consideration. If it's going to go, going to go up here next, going to go up there next, where is it going to go? Which box is it going to play in? So that being said, that's why I highly believe, because it would basically, what we're saying is that if it's going to get above this line, what we're saying is that it's going to get below here, right? It's going to take this, right, this line right here. It's going to get below this line for it to ultimately get above here, for the British pound. So whenever it does get below there, that's when we should see this crack, this British pound. But then again, it has been higher than this, right? We did get this spike way up here, right? But then again, that's kind of, let me get rid of these purple lines here. That's more of, I guess you could say, the divergence. Definitely some divergence that's been happening in between the dollar. Well, I mean, we did get it way down here. Yeah, I'm not gonna lie. Okay, so we did get this breakaway way down here, and that would be the equivalent of this huge spike here. But it's not that far off. But I think if we do clear, especially this right here, we will see the clearing of this GBPUSD. And the same goes for the euro. Now, currently I'm in the euro. I do think right now, especially like I said with the GBPUSD, I don't think we're going to be trying to go up. I don't think the dollar is going to be trying to go down and break these lows, but it might be. I don't know. If it does come down and break these lows, though, I do have contingency plans. This area over here is definitely very, very bullish at this part right here. As soon as it hits this low, it takes off dramatically. It's a what we call it. It's a what's the word I'm looking for? Smart money reversal. It's exactly what I'm looking for. Smart money reversal is exactly what that is. That's coming off of a bullish order block. Now, unless there's some kind of like catastrophe or something that could really, really, really hinder the dollar within the next, couple of, well, there could be a lot of things that could hinder the dollar within the next couple of weeks, but I'm thinking more so the next couple of days. We won't see something like it just go straight through that. If anything, it could just take a bounce and then come back up, and then we're still going to be in this consolidation, which is why we've seen the pound be in the consolidation, which is why we've seen the euro be in the consolidation. Going back to the euro again, I am in this, and this was the original. I do think, with the highs, right? So one thing I do like to look at is the highs, the daily highs, because generally they're broken, right? I mean, unless you get one day that's going to have this huge range, and that you're not going to have like this same like spiral effect of here, let me see if I can draw like a little example here. Let's just say you do have this one day. Oh shit, it has this. Let's say you do have this one day. Stop it. Let me just get rid of this. Let's just say you do have, one day where you have, it goes up way up here, right? So you have that one day, right? More than likely what's not going to happen is this, right? You're not going to... Well, that's not working. Let's just say each one of these is a day, right? You're not gonna see it slowly, make a, like a funnel inward. I mean, I guess it is possible, but you're not gonna see a flag like this happening, on a daily basis. That's just usually not how it happens. Usually what happens is that you will see, you'll make a high, right? And then you'll see a pullback, and then you'll see it break that high, and then you'll see something like this, and then you'll see it break a low, and then you'll see a little pullback, and then you'll see it break another low, and then you might see it even get lower, but then you might get a huge one and break a couple highs, and then a pullback and break a low, and then another, it's usually what you see in a range, right? So that being said, what I like to look at is I do like to look at each individual day, especially going back a couple days, because that's what the Grandmaster Flash, Mr. Michael J. Huddleston, I suggest you watch all of his videos. it makes a lot of sense to go back at least 3 days, and check out the highs and the lows for those days, and then the highs and the lows, that'll be nearest after those 3 days, because generally what will happen is it will, price will generally try to break those. I don't even know if it's on purpose or if that's just the nature of the game, but as you can see, what I have marked up here is, let me get rid of this over here. As you can see, I did make this idea over here. Some people did like it, but as you can see, you have these daily highs here. You got 1, 2, 3, and your last one's up here. You still have a daily high kind of back here, which does actually play kind of an important role because it's kind of equal to another high. And these two are almost fairly equal too. So when two highs are close to each other, it makes it easier for them to break, for this to push forward and break. So considering these are not really order blocks, this is more kind of spikes. It looks like it kind of spiked up into these areas and then pulled back, and then decided to push forward. But it did kind of hit an area, at least this blue line right here. This is a very historic resistance line, I guess you should say, support resistance line. As you can see, there's a lot of areas to where it just barely come through it, or it does go through it, touches it. And if you go back, back to these areas, there's a line here that does it. Here's an area to where it does it. Here's also a good area that does it. We want to keep going back. You can kind of see it kind of around here. Here we go. Here's a little part that just touches it right there. Here it is again. You get all these areas right here. So whenever I drew this line on purpose. And so, I have been kind of watching this, and whenever it actually touched that line tonight, it just it was going up really, really rapidly. I don't know if you noticed EURUSD at the end of the day today. Here I'll even get down to the 5 minutes of it because I want to show you how quickly this went up at the end of the day today. I'm probably in a little bit too close. It was, here, this area right here. It just kind of, from about 8 o'clock this morning, but even more so, it was slowly going up. Then at the end of the day, around noon, it just kind of took off, and it took off all the way up until about 3 o'clock. And once I saw it hit that line and it just stopped, I was like, whoa, that's that line I've been talking about. And then I look backwards and I'm like, okay, it was, resistance became, it became support, turned around, became resistance, and I was like, this is actually a significant point. So without even thinking twice, I just dropped the sell, and then I looked at everything else. Well, I've been paying attention to this for a while, and I saw all these highs up here, and I said, it still has the potential. It does have the potential to go higher. Just because it hits a resistance line doesn't mean it's going to stay below it. So I have two potential areas to where it could just drop from here. It could, but what it could also do, and what I'm thinking is probably going to do, especially with a dollar acting as finicky as it is, could possibly breaking this low, right? And possibly breaking this low. Meaning it's probably going to break all these highs, and once it breaks all these highs, you got to find an entrance point. So I found the last high, which would have been this one. I think I would probably enter after it breaks that high, because generally once it enters after it breaks the most recent high, it likes to do a little turtle, like, it's a false breakout. It'll pull back, and then it'll pull back up again, and then go down. Just like it did here. Here, false breakout, go down, pull back up, then go down. Didn't want to move that. And then same thing here, almost like a false breakout. Went down, pulled back up, could have sold from here, But then again, now it's pulling back up. So this is what's making me think twice, is that this is what could actually lead this up into here, up above this 8.900 area. And then ultimately probably try not to get above the 1.93 area before returning down again. If it does, then we are definitely below the that low point. So here is that really high point in the Euro USD. If we look at the GBPUSD, it would be the equivalent to this guy right here. And if we look at the DXY, it'd be equivalent to this thing right here. So once we are above that in the GG and the EU, then we are definitely probably below that in the in the DXY. If we do get above that in any one of these two, but we're not below it here, then we have some divergence going on, and we need to take a look at to see what is happening with that divergence, and to see if the DXY is gonna, let's say if the DXY pulls down below here, but GU and EU doesn't. Let's just say it only picks up to right here. I think that would probably be a recipe for, the DXY to ricochet back up into this area really quickly. Opposite going for here, if we see these getting up here above these highs, in the GU and the EU, getting above these areas, but the DXY, kind of comes down to here in this area, then I think we have the potential for, these guys whiplashing back down into, the consolidation area really quickly. But if all three go in the same manner, they all three get below here, then I think we all have the potential to, these guys have the potential to go higher, DXY has the potential to go lower. So that's what I wanted to kind of draw everybody's attention to, was just to watch out for this area, these areas in particular, because we've been flirting with it for a while, but now I think we're closer to it than we have been the last couple weeks. Sorry if I keep flipping back and forth. It's just kind of what I do when I look at charts to see if I can spot something new. But I think, if anything, what I do think is going to happen, I do think we probably are going to have this DXY drop a little bit lower, right? Probably hit this bullish order block and then continue back into the consolidation phase, right? And I think we're going to see this again for the next couple months. I don't think there's anything dramatically change. I'm not big on fundamentals, but there are some fundamentals out there that are signaling a little bit of strength of the dollar. But I don't think there's going to be anything weakening of the dollar until, not trying to be political or anything, but until maybe after January 20th, until some new policies are implemented that could weaken the dollar, and that could be anything to dealing with China trade deals, things like that. Considering they hold our debt, most of our debt anyway, and if we're going to do anything to try to appease them, then that will be a surefire way to shrink the dollar for sure. So those are the kind of things that we need to watch out for. So until then, I still think we're going to be in this consolidation phase. So that's why I think right now, I think we're safe, at least safe to be in this consolidation phase. So continue looking out for these kind of, big highs and big lows, and look for these same kind of, these same kind of, I guess you could say fractals, in price action, right? These same kind of false breakouts to where it looks like it's gonna, you get like a huge liquidity run right here, and it looks like it's gonna break out, right? Don't chase after it. Wait for it to go down, retrace back up, and then sell, right? Same thing here. Don't chase after it. Wait for it to pull back up and then sell. But then again, maybe selling here is not a good idea. Just like I did here, I sold. But then again, I also have a backup plan. Even though I did sell, I also understand that there are some highs above it that it could want to break. And there in that next scenario could actually come up here. So what could possibly happen is we come up through here, do one of these, and then hit here, and that's going to be that moment to where it's going to be that fake out, and then pull back down, right, and then pull back up, probably about 70%, somewhere around there like that, and then that's the massive sell-off. And that's, I think, probably is what is going to happen. And if I were to draw a fib, an imaginary fib, I was almost spot on, just because I've seen these so many times now. I almost know exactly where it's going to retrace to. There's that 70.5 retracement zone right there, that line. That is exactly where it likes to retrace to, is 70.5. So if we see it over here, 70.55% retracement, that's almost every time where it likes to retrace to. So like I said, I am going to sell here, but I'm not worried. I'm ready to hold, because like I said, I think we're going to be okay. If anything, I think what's going to happen is it's not going to break out up here, because if it does break out up here, again, that means that we're going to be below here on the DXY. So instead, I think what it's going to happen is I think we probably will end up doing one of these and do a fake out up here after we break above this swing high. It'll be like a fake out, probably no more than 10 pips above that high, right? Come back down, and then retrace back up to about right here, and then continue on. And then again, if I were to draw a fib, let's see. I don't know where I drew that at. So was that 60? I was almost damn near right at the 70.5. I was in the 70.5 and 80. Just because I've seen it happen so many times, I almost know exactly where that it's going to come to. So anyways, and also I guess we'll go ahead and take a look at the CAD. So what does that mean for the CAD? As you can tell, it's kind of similar to the US dollar, but it's really not, because the dollar actually had its low here, right? So, or actually it was way back here. Let me take a look at the DXY. DXY September, August 1st. CAD, I'm actually on the 1 hour instead of the 4 hour. Let's go to the 4 hour. September, that was then, here we go, September, August. So the CAD had a little bit of divergence actually, so its lower low was more recently than what the dollar actually was. It does have a weekly order block that came back from December. So back here, if you put it on the weekly, it's actually one big down move. This whole part right here is an entire week, right? So with that being a week, it actually took about, or probably longer than that. But, the weeks it took to get up brought it out of it. So once it slammed back down into this weekly order block, it was bound to come back out. But now it's actually traded through that order block. And we'll see if it has enough strength to carry up and out of it, which I think it's going to be doing the same thing. We're going to see the CAD play in this range now too. But now we got to wait and see. CAD's going to be doing the opposite. It's going to be doing fake outs up, and then fake outs up, retracing, or maybe even fake outs down, retracing, whatever, and then you do the buy instead of the sell. So we'll have to see what happens with the CAD, and on that note. So as you can see here, this is probably one of those moments I was talking about. Let's get down to the 1 hour of this. And yeah, this is actually one of those kind of similar things here. Yep. So, goes down, right? Has almost like a false breakout, a false breakdown anyway. Once it has a false breakdown, turns around, pulls back up, and then retraces down to about 70.5, 80%, and then you can buy from there. More than likely, it's going to continue buying. It kind of generally, once it gets to this point and you do make that decision to buy, it does do this same thing over and over and over again. It'll play around here in the middle, and then it'll eventually take off, once it makes this formation. But it's made this formation recently in all of the moves, right? So, false breakdown, pull up, pull back down, 75% buy. EURUSD did the same thing, up, or false breakout, did the breakdown, pull back up, about a 75%, you can sell. Same thing with GU, well down, pull up about 70.5%, you can sell. Then it kind of hangs around this area, but eventually it'll break down. It is going to want to break these highs. Same thing with EURUSD. It's going to want to break these highs at some point. When, I don't know. It could be sooner than later. I just think it's going to be later. I think right now, since it's in the Asian range, we're going to be seeing it playing in this time zone or time frame for this range for quite some bit. And I think eventually it'll probably drop off. If it does pull up and go above, that's going to be probably during the London session, and then that's going to be it. The London session usually makes a spike and then pulls off. The question is that where are we in the weekly status is the real question. So we started on November 8th. So oops, wrong one. So we started around here for the week, right? So we started around here for the week. We have made a high, we have made a low for the week, and we have made another high for the week. So we went sideways for the week, basically. We haven't really done anything for the week. This could possibly be, just almost like a doji candle once the week is over, because it could come back down to this orange line, which is where it seems like we have started out for the week, which means we have actually gone nowhere. So or who knows, it could be one of those things where it takes off at the end of the week, or it could be another thing to where it breaks down and we have a big a pin bar for a weekly candle. So but just my 2 cents, again, I've seen this move over and over and over again now after watching it. The down pull, the pull back up to the 70.5% mark, and then the sell off. I think that's what's going to be happening here too. If anything, we may see a little bit more divergence here, which we have been a little bit more divergence here in the EURUSD than we have been, the GU. So I think the EURUSD, I honestly think it is probably going to go up a little bit higher, clear these highs before pulling down, going into next week. And I'm prepared to hold over the weekend because I think the EURUSD will eventually go lower. Just because I'm in the 5-minute chart right now, so if we look at the 4-hour chart, anybody who's been paying attention to this, you can kind of see how the euro has been acting. Commercials are down here on the red for the COT, the commitment to traders report, which means they are still, see right here is where it changed. So here, let's scrunch this up a little bit, right? So we go back all the way back to March. So if we scrunch this up, this is where the COT was long. So it was long here, right? Made some money on the way up. Right here, it put in a bunch of shorts, right? And made shorts on the way down. But for some reason, it continued to add shorts. Continued to add shorts. And look here, it even added more shorts here. Commitment to traders. So these are big time traders. They are adding more shorts on its way up, which tells me that for it to actually make money on its investment, it's going to have to go down at some point. That's right. And while it's going down, it's going to add its longs, right? So while it's going down, it's making money on its shorts, but it's going to add longs. That way, when eventually it does go up, it's going to add longs. So this goes back to the market maker sell model theory. Meaning here, let me get rid of this actually really quick. So it got to this point, to get to this point, to get to this point, right? And so here is when it started adding its shorts. So it started adding its shorts here, and it's the maker market sell model theory, right? So it pulls down first, it comes up here. It's going to probably have to get back down to here before it actually makes money. So that's why I have down here a pivot profit. I can probably actually move these over a little bit because I was planning these back whenever these purple lines were in. So I can probably do the same thing for here. And if you haven't watched my videos regarding this, is because, and I'll do a really quick synopsis of this. If we take a fib, right, and we take the top of it and we place it here, right, and then we take the bottom of it and we place it here, right? So then this would be where they started the shorts, right? So then up here is this just them being in the red, right? So now we have to wait for them to get into a good spot to sell, so that way they can get into the green. So that's why I think they're going to be selling up here. You know, maybe they'll break some highs along the way, but they're still looking for places to sell. You know, they're still racking up basically what they're doing is they're racking up a lot of sells in this area, and that's why they're still net short, right? So their net short is because they're racking up a lot of sells in this area, right? So it's still gonna have to come down, right? And that's why I had these boxes here the way that they were. Here is, you know, this is the 100% extension, which would be right here when they first added those shorts. Here is the first extension past the 100, and then here is double the extension. That's why it says pivot profit, because that's the double the extension. That's asymmetrical from this top point here to this top point here in March. If you take that and take that space and then push it down here, that is where you get the actual pivot profit. So that's why I still think we have a long way to go, and that's why I think the EURUSD is definitely has tendency to sell, and that's why I think we're probably going to be selling soon again too. You know, like I said, it wants to push the price up. It wants to make you think it's going to be a fake out and it's going to be a buy. But if you pay attention to all the signs, it's a highly a sell environment for sure. Now that being said, GBP the exact opposite. Even though they play kind of similar with the dollar, and they're almost they kind of move in tandem with the dollar. The British pound has a tendency to actually move up quicker. It doesn't have a tendency to sell as quick. So as you can see, instead of back in March, whenever the euro was up here, the British pound was down here. So they both started moving the same direction. They were both kind of went up, and they flirted with this, and they both made a high. But the difference here is that the British pound is going to want to seek higher prices. As you can see, there's monthly equal highs that date back to 2019 that are spread apart. It's going to eventually want to break that. It's going to want to break these highs here. So that's why I am not putting any kind of sells on the British pound. If anything, as you can see, the commitment of traders Here is they have added more longs, to their arsenal than they have shorts. If you go to Euro USD, the red, they have more shorts to their arsenal than there are longs. So that's the main difference between the Euro USD and the GBP USD. If we want to go to CAD and we want to take a look at their commitment to traders and what they're likely to do, they're short, but they're about right in the middle, right? So they're playing it safe either way. It looks like they're going to be playing this range, primarily it looks like they've had more shorts. So if they've had more shorts, generally what we'll do at this point, especially if they recently drop with this short, it means it's about to go long, right? And so it did at that point. So they dropped with a short right there. You can see it went short, and then all of a sudden it went long. Right, so now it's going long, so what do we expect? Well, I personally would expect another long, just because they've already set up for that. They set that short up here. It was a big drop, right? So then they added some more longs. Whenever it came time, it was probably in this area. That's the thing with this commitment to traders. It doesn't really give you, it's not as dynamic as a price chart would be. Is probably they just set them on one day, and then that one day is when all of that happened, and it just kind of accumulates that for like a week or something like that. So it could have happened on this day, and not really, I really draw a horizontal line here just to give you an example. They could have added all of their longs in there on that one day, but they just put them spread out for that week just because, right? So where they added all their longs in on this day right here. This day right here, which would actually make more sense, since that was the lowest point, and now they're waiting for it to go long. So that is why I think we're going to be seeing some long action happening with the CAD. That's why I think we're going to be seeing some long actioning happening with the DXY. That's why I think we're going to be seeing shorts with the Euro USD. And GBP USD, you're going to see, it'll be you'll see shorts, but you'll see shallow shorts, right? But you're going to see more long action happening out of the GBP USD than anything. Whenever it does go short, it'll be shallow short as compared to the Euro USD, to where it's going to be a deep short. So anyways, that's what I had. I just wanted to give kind of a quick synopsis of correlations between GBP USD, Euro USD, of course the dollar itself, and my third favorite, the USD CAD. You can kind of take a look at it as well with the Aussie dollar, New Zealand dollar, dollar yen, dollar franc. I don't like to trade those as much, just because I like to keep it simple and keep it to a couple pairs. But if you look at the correlation between those three pairs and the dollar, you can see a lot, and you can actually make some good trades based on that, as well as also keeping an eye on the commitment of traders report, as well as going to barchart.com and taking a look at the open interest, and seeing what's happened with the open interest. Like the open interest with the euro, it's kind of flat. It's actually very high and kind of flat. Which means that there's probably going to be a dip soon, and if there's going to be a dip, if there's going to be a dip soon, that means there's going to be a buy. So if it's high right now, that means there's going to be a sell, and it's been high for about a week or so. So that's why I'm thinking the Euro USD is going to be a sell, and then after that sell, we would probably see a dip in the interest, which means we would see a buy. So all the more reason for Euro USD to sell. But again, it could break those highs. So just a quick synopsis, quick rundown of what is going on in the Forex market this week.